The set it and forget it QuickBooks setup that runs itself. What I wish every business knew. I spend 4 hours every month just trying to figure out where my money went. That's what Jennifer told me last week. Meanwhile, my client David spends 15 minutes a month on his books and has better financial reports than most Fortune 500 companies. The difference? David set up QuickBooks right from day one. I'm Bev from bookkeepingcoach.net. And here's what most people do. They download QuickBooks, connect their bank account, and start clicking buttons. They choose accounts randomly, set up vendors inconsistently, and hope for the best. 6 months later, they're drowning in financial chaos. Jennifer is a perfect example. She's a marketing consultant who's been in business for 2 years. Smart woman, organized in every other area of her life, but her QuickBooks is a disaster. She has 40 different expense accounts, vendors and customers mixed, no bank rules, and everything gets categorized as either office supplies or business expense. Every month, Jennifer sits down to do her books, and it takes her 4 hours. And at the end of those 4 hours, she still doesn't trust her numbers. She can't tell if she's profitable, she can't predict her cash flow, and she definitely can't make smart business decisions based on her financial reports. David, on the other hand, spends 15 minutes a month on his books. That's it. His reports are accurate, he knows exactly where he stands financially, and he can make business decisions with confidence. The difference isn't that David is smarter or more organized. It's that he set up QuickBooks properly from the beginning. The problem isn't that QuickBooks is hard. The problem is that most people spend 20 minutes setting it up and 2 years fixing it. Today, I'm going to show you how to avoid that entire mess. Let's talk about David's chart of accounts. He only has 15 expense accounts. Each one has a specific purpose. No overlap, no confusion, no accounts called miscellaneous or other. Here's the thinking behind his setup. You can always add accounts later, but you can't easily delete them once you start using them. Every account you create is another decision you have to make every time you categorize a transaction. The more accounts you have, the longer it takes, and the more mistakes you'll make. David's expense accounts, cost of goods sold for anything he resells, advertising for paid marketing only, auto and vehicle for business vehicle costs only, insurance for business insurance only, office supplies for supplies used at his office, professional services for accountant, lawyer, and consultants, utilities for his business location. Here's what Jennifer did wrong, and what I see most of the disaster books I clean up. She created accounts like miscellaneous expense, other business expense, and general office costs. These accounts become dumping grounds for everything you can't quickly categorize. She also created separate accounts for every vendor, Staples expenses, Home Depot purchases, Verizon bills. This is backwards thinking. Accounts should be organized by what you bought, not where you bought it. You might buy office supplies from 5 different vendors, but they're still all office supplies. Don't create sub-accounts unless you absolutely need them for either tax reporting, loan requirements, or business decisions. Sub-accounts add complexity without adding value for most small businesses. Jennifer had office supplies paper, office supplies ink, office supplies equipment, completely unnecessary detail that slowed down her categorization process. Here's how to set up your chart of accounts properly. Start with the defaults QuickBooks gives you, but delete the ones you won't use. Be ruthless. If you can't immediately think of 5 transactions that would go into an account, delete it. Add accounts only when you need them for tax reporting or business decision making. Ask yourself, will tracking this separately help me make better business decisions? Will my accountant need this broken out for tax purposes? The account is no, don't create it. Use clear descriptive names and leave no space for misinterpretation. Things like professional services, legal, and accounting tells you exactly what belongs in there. Automated bank rules is where the magic happens. Bank rules tell QuickBooks how to handle recurring transactions automatically. Set them up right, and 80% of your transactions will categorize themselves correctly. Here's how David's rules work. When a transaction comes in from Verizon Business, it automatically goes to utilities and gets marked as a business expense. When a transaction from Shell gas station comes in, it automatically goes to auto and vehicle. Things like PayPal or Venmo, we're not sure what they could be, so they don't get categorized with a rule. The goal is to reduce the number of decisions you have to make, and David's rules handle about 80% of his transactions automatically. The remaining 20%, unusual expenses, new vendors, large purchases, get his personal attention. That's why he spends 15 minutes a month instead of 4 hours. For vendors that could be multiple categories like Amazon, don't set up rules. And make sure you do individual transaction reviews. Don't try to guess. Amazon purchases could be office supplies, equipment, inventory, or personal expenses. It's better to review them manually than categorize them wrong automatically. Set up threshold rules for large transactions. Anything over $500 should require manual review, regardless of the vendor. Large transactions are either mistakes, unusual purchases, or important business decisions that deserve your attention. For predictable expenses like rent or insurance, set up recurring transactions. QuickBooks will automatically create those transactions on the right dates with the right categories. You just need to approve them when they match the actual bank transaction. Set up your vendors and customers properly from the start. Include tax IDs, addresses, payment terms, and default expense categories. This information gets pulled automatically when you create a transaction, saving time and ensuring consistency. Every Monday, David spends 5 minutes on what I call the weekly quick check. He opens QuickBooks, reviews any transactions that need manual categorization, approves automatic categorizations that look correct, and looks for obvious errors or duplicates. During the weekly check, you're looking for transactions that seem unusual, amounts that seem wrong, or vendors you don't recognize. You're not doing detailed analysis. You're just catching obvious problems before they compound. Last day of the month, David spends some time on what I call the month-end deep dive. He reconciles all his bank accounts, credit cards, and liability accounts, and I mean really reconciles them, not just checks that the balances match. He runs a profit and loss report for the month and asks himself, does this make sense? He checks his cash flow to make sure he's not missing any major transactions. The questions David asks during month end: are my revenue numbers consistent with what I know about my business? Are any expense categories unusually high or low? Do my cash flow numbers match my actual bank balances? Are there any customers or vendors with unusual balances? Every quarter, David spends about 30 minutes on business analysis. He reviews all expense categories for accuracy and business insights. He checks customer and vendor balances for collection issues or payment problems. He runs comparison reports to spot trends and opportunities. This is where QuickBooks becomes a business intelligence tool instead of just a bookkeeping tool. David can see which months are strongest and weakest, which expenses are trending up or down, and which customers are most profitable. This information drives his business decisions for the next quarter. With proper setup, QuickBooks becomes an incredibly powerful tool for business decision-making. David can run reports that show him which services are most profitable, which customers pay fastest, which months require the most cash flow management, and where he's overspending compared to budget. As your business grows, this foundation scales with you. Adding employees, multiple revenue streams, or additional business entities becomes much easier when your base system is solid. David recently added 2 employees and a second revenue stream, and his monthly routine is still just 15 minutes because the foundation was solid. Look, I know this seems like a lot of work if you're starting from scratch, but here's the thing. Jennifer, who is spending 4 hours a month, rebuilt her entire QuickBooks setup using this exact system. The rebuild took 3 hours total. Now she spends 15 minutes a month like David. Think of it this way. You can either invest 3 hours now to set it up right, or spend 4 hours every month for the rest of your business life dealing with chaos. That's 48 hours a year. In 5 years, that's 240 hours of your life you'll never get back. You have 3 ways to get this set it and forget it set up. Self-paced learning. My QBO Mastery course breaks this entire setup into bite-sized 2 to 5 minute videos. Chart of accounts setup, bank rules that work, monthly maintenance routine, over 100 focused videos you can watch anytime. New bookkeeper pass? If you're building your bookkeeping practice, join my group coaching for new bookkeepers. Learn to set up these systems for your clients and charge premium rates for proper setup. Business owner support? Want to implement this yourself, but with guidance? My business owner group coaching walks you through this step by step with bi-weekly group calls. Any of these paths gets you to the same place. QuickBooks that works for you, not against you. The links are below. And make sure you subscribe. Next week, I'm showing you how to know when you should DIY versus when you should get help.